Hello everyone. I am going to be showing you guys the indicator that I've created, A, how it works, B, my settings, and then C, how you can get it if you'd like to get it. And then also I'm going to be, and because that's going to be very quick, it's going to be maybe a few minutes worth of your time, and then after that I'm going to be showing you without it on, um, how to do this stuff by yourself once again, because in order to reiterate what you need to be doing, you need to see it multiple times in different scenarios so that you can be successful. Okay, so without further ado, let's go ahead and get started. So um, first of all, I created this indicator that shows you basically these different patterns. They're the Cypher pattern. You can adjust the entry, either your 618, your 707, or your 786 in your golden pocket of your fib. So just to show you what that means if you were going to go long here, right, that means you would be entering either here, here, or here. So here, here, or here, right? So I picked the 786 because your invalidation point is, if you're doing a bullish cipher, is at the bottom, so a little below that, a few points below that. And then if it's a bearish pattern, it's a few points above that, so it would be the top of it, right? So here provides a really decent risk to reward, and when I'm putting my profit takes here and like here, right, like here and here. So that's why this is going to be as accurate as it is. You can adjust the size of the patterns here, so you can make it smaller, bigger. This will get more accurate with the smaller ones, as you'll see. But for me, I found that having it either like here, this provides a decent spot, or here is solid. And then as far as these go, you can just kind of look at them. I'm not really going to explain them because I don't necessarily want to go into that much detail in it. It's adjusting, like the size of the different legs, okay? And then you have your target point value, and you can pick any of basically any fibs that you want, any line that you want. So if this is your entry, right? Sorry, I drew it down. So if this is your entry, right, or this is your entry, or this is your entry, you can pick anything that is, below that would give you a profit point. So you can change that in that way, right? So I've made it to where I have my 382, and then I have my negative 236. And my stop loss value is 8.5 points for ES. So now what does that mean? What does all that mean? So let's go ahead and look at this for an example. This painted a bearish cipher pattern. My entry is here, the golden. My first target point is here, and my second target point is here. So as you can see, we hit our entry. Our stop loss is all the way up here. So we hit our entry, we bounce off the 200 EMA, which if you're manually doing this and you're looking at it, you would probably enter here and then actually average down here, and maybe even adjust your target point to be where your entry was, because you're now somewhere right in here. So you could do that, or you can keep it there. Now you have an average of here, and then you get out of all of it right here. Let it go. Right, so that's how that works. All right, and you can adjust the stop loss and the pivot length to make this more or less accurate. But for me, I found that this is the sweet spot on this particular time frame for ES, which is what I like to trade. So that's how this works. For me, it's about 70% accurate. Works very well. It gets me to the point where even when I, miss my 3, which aren't never in a row, but when I miss my 3, I'm still up, several $100s, so it doesn't, it doesn't affect me too much. And this is kind of not showing the full effect of how accurate it is, because there's a lot of patterns that, and I think I can show one, like this right here, right? So this doesn't hit its entry and then goes to targets, but it'll count it as an entry if we ever go up. So that right there counted as an entry, and then this went and hit stop loss. So this is counting it as a loss when it's not really a loss, because you never would have entered it. So take that with a little grain of salt. You're not going to enter every single pattern, because it's not going to give it to you every single time. And a good way to know, like, you shouldn't enter it is if it goes here and it doesn't quite enter and it hits your targets, and then also, this is the bottom of the pattern, so this is the validation point. If it goes below this dotted line, for that, it's invalidated. If it goes above this dotted line on here, it's invalidated. So, like, this is a bullish pattern and this is a bearish pattern. So you can say, like, hey, it's already invalidated, not going to enter. Hey, this is invalidated here, not going to enter, right? And that's how you would look at how to use these. All right. So let's go ahead and turn it off. And now, how do we do this manually? How do we see some of these manually? So manually, you're probably not going to see the smaller ones that this thing was painting. You're going to see things that look more like this, okay? This right here. So this is going to look like an M for you, which is a bullish Cypher pattern, okay? So it looks like that. And what you do for bullish Cypher patterns is you come over here to your fib retracement, you click your fib retracement, and you draw from the bottom to the top of the pattern. And what you're looking for is to enter at your 786, and you're looking to exit at either your 382 or your 236 right here. So you can pick whichever one you want. For me, this one hits a lot more, so I've been using this more, especially with futures on these bigger patterns. This is more than enough for me. So, you would enter here at 42 and exit at 53.75. So that's 11 points. That's like $550 on one contract if you did that. So, and your stop loss, since this is 37, you would have it somewhere like right here at like 32, maybe 31.50, something like that. So like 6.5 points below. So you can give yourself a little wiggle room, because sometimes what can happen is it'll go down to like something like this and then pop up. So you want to give yourself just a little wiggle room. But that's how you would do a bullish pattern. Let's go ahead and show a bearish pattern. So this is actually right afterwards, a bearish pattern. So we have a bearish Cypher pattern. And you're going to draw from the top down. And basically a good way to remember this is, where do you think it's going to go? So if it's bullish, you think it's going to go upwards, you're going to draw it up. If you're bearish, because it's going to go downwards, you're going to draw it downward. So that's a good way to remember it. So you get your entry. You can do, what I like to do is, I like to have an average down right at this point here, or an average up in this case. I would average here. And of course my stop loss is going to be, this is 64.25. I'll give myself, 71, something like that, or 71.50. I like to give myself those 50 cents. It likes to kind of hit even points and then turn around, not the increments. So I'll give myself like 71.50, 71.75, stop there. And then what you'll see is I'll get my average down, and my profit take at the 382 gets hit and bounce off of this lower ADR right here and pop up. So I get my exit, I'm happy. And remember, I'm going to draw you example Cypher and bullish and bearish patterns so that you can remember what you're looking for. So in a bearish pattern, you're looking for staggered lows. Okay, so you're looking for a high point, a low, a new high that is lower, right? Lower than your first high, and then a new low that's lower than your first low. And then what's going to happen is you're looking to get above this high, but stay below this high. So how do you determine your entry? That's where your fibs come into play. And as you can see, I do this quite often, so I drew it pretty darn close to the 786 because that's a perfect W in my eyes. That's what I'm looking for. When I call them W's, because they look like W's, right? So that's a bearish. A bullish, you're looking basically for the same thing but opposite. So you're looking for staggered highs, right? Something like that. You're looking for a low, a new high, a new low that's higher than your old low, right, your first low, and then a new high that's higher than here, and then what you're going to see is a new low that's lower than this one but higher than this one. And how do you determine your entry? You use your fibs, you draw from there to there, and there you go. So that's literally all you have to do. You don't necessarily need the other stuff that I have on here, but this is very useful in the sense that let's just say your exit point is supposed to be right here. Okay, say you get in this bullish pattern right here, right? You get in right here, somewhere like right there, right? You get in and your target is here, but you see on your volume profile, and that's what this is your volume profile, and what your volume profile shows you is bullish versus bearish volume in levels in real time, and also has this thing called a point of control, which just acts as kind of a, think of it like a gravity point per se. Like your stock is going to tend to always come back to this point quite a bit during the day. So as you can see, right, boom, 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 and reject several times, boom, boom, comes back, boom, right, finally breaks out and leaves it, right? So you see that happen a lot of the day. So what you can do is, if you're in this and your target's here, you can say, you know what, let me go ahead and exit here instead because it's just safer, right? And just to also go, and on the flip side, say you're in a bearish pattern, right? Have this other indicator called ATR versus ADR, and what that shows you is your average true range and your average daily range. And your ADR will give you a lower ADR and an upper ADR, and you can expect to usually reject in these areas and basically trend in between these two areas. If you have a big volatile day, you can actually hit both sides and reject off both. It happens quite often, especially in ES or in Q. So or like QQQ or SPY or whatever, right? So what you can do is you can use these as exit points. So, you know, if let's just say I get in this bearish W right here, and I decide, you know, my exit is somewhere in here. Well, to be smart, it would be good to take your lower ADR line right there, and as you can see, you do fly up after that, which would have then hit your stop loss if you didn't take it. So, you know, be smart about it. Also, if you're in this, right, if you're in this bearish cipher, and you get in, right, and your stop loss is here, okay, let's see, this is 64, I said it would be 71.50, right, so my stop loss is there, right, and I'm going to average down here one time, okay, just one time, not every time that we touch it am I going to average down, but I'm going to average down this time right here. Now, what I can do is, as we start pushing down, I can then go and I can say, okay, now, actually, let me go ahead and take this off. Now I'm going to move my stop loss to break even, right? So when we, let me make this right. Sorry, it's bothering me. It wasn't even. I don't think it is still, but whatever. So as we push down from here, and now my average is somewhere right here, once we break this line, I may go ahead and say, let's go ahead and put my stop loss here. So once we break it and we get down here, I may put my stop loss here and end up securing here. Or I want to wait until I get out of my golden zone. I usually like to wait until I hit 2, like break down 2. So if I have to average down and now my average is here, right? So let's just say instead of here, now my average is here. If I have to average down and we break below this line, I will then go ahead and put my stop loss here. So in this case, maybe I did get out here because we broke below, but I will wait for it to hold below. So in this case right here is when I do it. So we break below, we hold it, we come below here, and we hold it for a good little second there. So I would actually ended up out right here, okay? And that's just to be smart and make sure that you don't let something green turn red. You just kind of want to trail it down as you break down certain areas. So, then let's just say this didn't happen and you broke down here, and you get down here, you can then go there, and as you break down, let's just say you don't quite touch the line, but then you push back up, well, you secure there, and you're happy, no problem, right? So trail it, make sure that you're paying attention to what's going on, and this will work 7, 8 times out of 10, especially the bigger ones. They work a lot better than even the smaller ones when you're manually doing them yourself. So what I like to do is I like to use my indicator that I have to supplement the time in between getting these, because what I can do is I can secure, especially with ES, something like this, I can enter and secure $100. Secure $100 right there. Secure another $100. So, I can do it like that, and then I can go ahead and enter something like this and secure $500, $600. So this is how I'm able to make, $500 to $1,000 a day trading futures, especially when I'm doing my funded accounts, which I got funded. This is your PA account with Apex. Once you finally get it, you still log in like normal, and your name changes to PA Apex. And as you can see, in one day I made the $531 because I started at 25, right? That's the size that I had gotten. So, this is something that you can do to supplement it, but remember, you're not going to want to take every single pattern. If it's less than a 1 point or $1 move, if it's less than moving $1, then you don't want to take it. If it's $1 even, I still usually won't take it. But if it's 2, because 2 can be $100, like in terms of how much money you make in profit, I'll go ahead and take those. But also, again, if my entry doesn't get hit and then it flies down or up, I go ahead and count that as invalid, and I never take that. So, yeah, this is how I like to trade. This is how I do it. If you do want to use this and get this, you do have to join the Discord group. If you want to join the Discord group, you can send me an email, or you can comment on the this video on YouTube, and I'll try and send you it in a response. So, yeah. Oh, actually, I can go ahead and do this. So if you do want to get it, let's go ahead and do this. If you want to get it, you can do this. Make sure this is, oh geez. Let me make this smaller. Oh, well, you can scan it right here. I think you can see that. Yeah. If you want to do it, you can scan that code right there, and you can join in. If you join in for just 1 month, you'll see all of the settings in here, and that will, it'll be easy. You set it up however you want after that, and then you can leave after the first month, and you can have it forever if you want that. So that's up to you. If you don't want to use it and you want to just manually do this, I'm going to keep releasing more and more videos like this again, because I've been slacking, and I'm going to be back on it. I'm going to be, doing more lives and stuff like that as well. So love you guys. I'll catch y'all next time. I hope that this was useful and helpful. Once again, just going to go over my indicators real quick before I go. Besides this one, my indicator, I'm using the volume profile, I'm using ADR and ATR, I'm using my 200 EMA, which I'm doing via the Williams Alligator as the jaws, and then I have an opening range indicator on for the first 5 minutes that has been pretty useful for me. But I think I'm going to change it to the first 60 minutes and the first hour and see how I like that. Yeah, I like that. So I'm going to do that and keep that on. And basically what these do is they all provide me little levels to be aware of for exit points or entry points if I have an idea in mind already, and I just kind of want to, be aware of other points of interest, right? I just want to have more confluence with my strategy as much as I can. So I use these to help me with that. As you can see, we do reject off of all these lines very well, right? So I don't have them here for nothing. And yeah, love you guys. I'm going to go ahead and exit now. Let me know if you have any questions, and I'll be there for you.